Today, I would be talking as a hedge fund manager. Now, first of all, I already uploaded one video on YouTube which talks about the FX risk management by Reserve Bank of India. I don't know whether you've been through this video or you've not been through this video, but the video has been uploaded. The second part of this video is this, which is the NIIP, which means Net International Investment Position. Like I said in my earlier videos, that the net international investment position is nothing but a difference of FX asset, foreign exchange assets, and foreign exchange liabilities. Like every individual who earns $100, common sense, his expenses would be $50, $60, whatever. The balance 40 is the saving. Similarly, every country except USD, the reason being USD is the reserve currency of the globe. Except USD, every country is having some FX reserves and alongside FX liabilities also. The difference is known as net international investment position. It is the duty of the central bank of that country to manage the NIIP. Technically speaking, the central bank of any country is playing two important roles, or better would be two important desks. Number one is the money market desk. Money market desk is a desk who actively participate in the money market on behalf of that central bank. Example, commercial paper, certificate of deposit, treasury bills, treasury notes, treasury bonds, and many things. You must be thinking that how come the central bank money market desk is talking about commercial paper and certificate of deposit? You know, in India, there is a term called NATS, N-A-T-S, NATS. NATS means the public sector banks, SBI, PNB, and all. They act on behalf of Reserve Bank of India in the market, which is called NATS. And 99% people do not understand that how NATS are working in India, how RBI is regulating the NATS. Rather, with full respect and honor, if you would be buying any book, you won't get to know that how NATS actually operate. How the treasury function of NAT or NATS are correlated or interlinked with the treasury function of RBI. This is very important. This is the reason why I always mention that knowledge is more important than degree. But unfortunately, people go with degree than knowledge. But I go with knowledge. I am a person of statistics. I believe in statistics. I went to RBI website and I downloaded the 3-pager report from the RBI website. Now this is from the RBI website. This is not my statistics. And this 3-pager report is none other than India International Investment Position as of September 2022. Actually, RBI declare net international investment position after every quarter, which means for September figure is released in December, which means December figure will released in the March 2023, fairly after 2 months, you can say. So we can, once December figure is released, I don't know when in March, then we can easily see the 4 quarters of 2022. And that video I would be making, but I need to wait by the time the figures are not in public. In this, I got some very important statistics which is called net international investment position, Please check these statistics. You know, guys, in September 2021, on a partially revised basis, shortly known as PR in our banking language, the FX assets, were, I would say, 932 billion. And by September 2022, which means around 1 year time, from 932 billion to 847 billion. From 932 billion to 847 billion, which means around 85 billion decrease. Around, you can say. While on the liabilities front, the liabilities as of September 2021 is 1.26 trillion. By September 2022, it is 1.23 trillion, which means just 30 billion decrease, which means the FX assets decreased by approximately 85 billion, while FX liabilities decreased only 30 billion. Now, in our technical parlance, this is called immunization. Now, immunization is of two kinds. One is gross immunization and what is net immunization. In money market, we call this sterilization. Now, sterilization again is of two types, semi-sterilization and full sterilization. So, like I said, it is up to a central bank whether they are doing full immunization or they are doing gross immunization or net immunization. I am a personal supporter, a big supporter of gross immunization. And it is up to the central bank whether they are doing half sterilization or full sterilization. But having said that, I am a supporter of full sterilization, not half sterilization. You know, guys, the NIIP, Net International Investment Position, in September 2021, approximately 335 billion negative. 335 billion. While in December 2021, it is 352 billion negative. In March 2022, it is 358 billion negative. In June 2022, it is 355 billion negative. In September 2022, it's 390 billion negative, which means we don't have any figure of December as we speak, but even if we go with the figure of September, India holds the negative international investment position worth 390 billion negative, which is a big figure. You know, there is a thing called asset liability ratio, which means that suppose your liability is $1 and your asset is 50 cents, which means asset liability ratio is 50%. In September 2021, it is 73.6%. In December 2021, it is 72.5%. In March 2022, it is 72%. In June 2022, it is 71.5%. While in September 2022, it is 68.5%, which means asset liability ratio is also declining. If net international investment position is not reduced to zero, and God forbid, China and Russia got a success in their plans. You must be thinking which plans. I'm not talking about war, I'm talking about financial markets. Russia in the last 1 year is trying to cut dollars. They are selling dollars and they are replacing it with Chinese yuan and gold. China is, if not buying gold, then China is also strengthening its Chinese yuan onshore, offshore, CNY, CNH, and cutting US dollars. God forbid if this NIIP, net international investment position, if it touched 500 billion, because it is growing up. I remember there was a time when it was 200 billion negative. Now it is around 390 billion negative. God forbid if that touched out to be 500 billion negative, and Russia and China both got a success in their plans displacing dollar, this would have tremendous negative repercussion on USD INR. Tremendous negative repercussion. Even today it is happening when rupee is around 82. The importers are paying a heavy price. Profit margins are very thin. We have depression, we have global competition, companies are laying off, everything is in public. The importer community is facing a very mammoth job. And the negative, and the IIP is negative 390 billion, which no one talks. Guys, just compute one ratio for me that would be very, essential, which is that the reserves asset, which is also known as FX reserves, the reserves assets of India as of September 2022 is 532 billion. And the negative NIIP is around 390 billion negative. Just calculate the percentage, you would get to know what I mean to say. But nonetheless, these statistics are very scary. We cannot ignore these statistics. Probably somebody else can ignore these statistics. These statistics are very scary, and RBI should handle these statistics very effectively. Why I'm saying that? RBI himself, along with Federal Reserve, Bank of England, European Central Bank, Central Bank of Canada, Australian, National Australian Bank, and multiple Central Bank of Australia and all, they hike the rates. And they are paying the price. Rather, it would be better if we use they are paying heavy price. Tech layoffs, bankruptcies, job losses, closures, and whatnot. RBI also hiked the rate, which means the cost of lending grew substantially. Now, if you have IQ greater than 9, you can link this with NIIP very clearly. RBI should be very careful, because God forbid if there is any mess in the form of depression, God forbid if Russia-Ukraine war take an ugly turn, God forbid, the NDF currencies, non-deliverable currencies, and INR is one of them, would have severe negative repercussions on them. And considering these statistics, which are available from RBI on their website, not my statistics, with a NIIP of negative 390 billion, it means a lot. This is Rahul Magan from Treasury Consulting Group. You knew my personal number +91 9899 242 978. Have a great time.